financially included society is a society where everyone has the opportunity to serve, invest, borrow, and grow. Welcome to Money Matters. My name is Faith Katai. Today on the program, we are focusing on financial inclusion. And to help us discuss this topic, I have with me in the studio the Public Relations Officer from the Bankers Association of Zambia, Miriam Zimba. Miriam, welcome to Money Matters.
Thank you, Faith. It's always a pleasure to interact with you and our viewers.
Okay. Just for the sake of our viewers, let's start by defining what is financial inclusion.
Okay, so thank you so much. Financial inclusion is all-encompassing. So in simple terms, when we define it, we say it's the access to and informed usage of financial services and products that are available on the market for the benefits of individuals as well as businesses and corporates on the market.
How is it important to an individual to be financially included?
Okay, so we all understand the importance of finances in our lives. Finances play a major role in our lives. So it's very important to be financially included because, as we said in the beginning when we defined financial inclusion, we're talking about access to and informed usage of these finances. It also helps one to become financially knowledgeable, and therefore it enhances your financial responsibilities in the use of these finances that come your way or finances that you are trying to get into your way or to have access to. So it's very important, and it also helps in poverty alleviation as well as wealth creation for individuals, for institutions, for companies, for corporates, as well as the nation at large.
Okay, so when we talk about access to financial services, what are we referring to? What type of products, services are we referring to that people should have access to?
Okay, so when we talk about financial inclusion and the products and services on offer, again, I'll bring you back to the two dimension. We talked about financial inclusion being formal financial inclusion as well as informal financial inclusion. So when we start with the formal financial inclusion, we're talking about access to mobile money services, we're talking about access to banking services and products, insurance products and services that are available, as well as investment opportunities which are under the capital markets. So those are the formal financial services, and those are the ones that form part of the formal financial inclusion. But we also understand that a lot of people also have access to the informal. In fact, there are those that border between the two. But I would like to believe a larger majority of our people, especially out there in the rural areas, are more inclined to the informal financial services and products. So these, we talk about savings groups, we talk about cooperatives, we talk about village banks, we talk about chilimbas. So it's a two-faced way of looking at financial inclusion.
Okay, so many people have bank accounts, like you've earlier stated, and use mobile money. Would we say that having access automatically to these mobile money and also accounts, does it mean someone is financially included?
So when you talk about having access to a mobile money account or a bank account, an insurance product or service, or any of these formal financial services that are on offer, that is one side of being financially included. Alone, it cannot be considered financial inclusion because we're talking about access to and informed usage of. So I could have a bank account, I could have a mobile money account just by name. It's sitting under my name as Miriam Zimba, but I'm not using it. So then it does not put me in the realm of being totally financially included. So you have to have access to as well as usage of. So when we talk about somebody who is financially included, we're talking about someone who is able to make payments, transactions. They're able to send and receive money, whether using their mobile account or using their bank account. They've got access to to information that can lead them to credit services. If they need to borrow money, they're able to because they know where they can get this kind of money. They've got access to saving this money for use at a later stage. They also have access to invest in various investment gears so that they can grow their financial portfolio in order to increase their financial base. So that is what, when you put all these factors together, that is what we mean when we say somebody is financially included.
Great. Let's talk about the benefits of financial inclusion, like a society, the benefits to Zambia. If we have a society that is financially included, what are some of the benefits that we would see?
Thank you so much. So as you know, government under the Vision 2030, as well as the national development plans that have been running through, I think now we must be on the 8th national development plan, or maybe we've gone slightly beyond that. A lot of it focuses on ensuring wealth creation, job creation. All these are driven by being financially included. Ultimately, government's goal is to reduce poverty and to ensure wealth creation at household and individual level. So when you talk about the benefits of financial inclusion, on a larger scale, that is what it means for the country. When you look at individuals, we're talking about me being able to move from making so much per day as maybe somebody who is trading on the market, selling maybe fruits or vegetables, to be able to move maybe to have a kiosk, and then eventually move to maybe having a booth or having a small store. So I am moving from one phase to another, meaning that in as much as my financial inclusion footstep is increasing, my poverty reduction is also, my poverty levels are also on the reducing side, as well as my opportunities to gain wealth as an individual are also on the increase. So those are the benefits that are there for people who are moving towards financial inclusion.
Okay. You talked about financial inclusion as in there are actually two types, informal and informal, and the informal one is the one that really is common in rural areas. So what are some of the major barriers that prevent people, particularly those in rural areas, to access effective financial services?
Okay, so please allow me to start by stating that formal financial inclusion levels currently in the country, when we talk about the formal financial inclusion, we're talking about it having moved from 61% in 2020, according to the FinScope survey of 2020, to now 76% in the most recent, which is the 2025 FinScope survey. But then when you talk about financial inclusion in the informal sector, there's been a shift by about 20 percentage points from 32% to 52%. So we've seen that over the years, financial inclusion has been increasing steadily. You might want to know what are the factors that are driving this. So you mentioned to say things like the informal sector are mostly into village banking, savings group, cooperatives, mobile money. Those are the major drivers, the game changers that have been there for those who were initially financially excluded or only had access to certain informal financial services and products. So these are the ones that are actually driving wealth creation, employment creation, and better livelihoods for our people in the rural areas.
Okay. We now go on a short break. Stay tuned.
The best entertainment comes together on Compact. Big Brother Niger is back. Bigger, brighter, bolder, because everything is for the taking.
Show yourself!
And it's on as the new football season roars into action.
Dream stop! Scintillating football this season.
Then if you love singing along, cheering from the edge of your seat, or action-packed adventure, you love DSTV Compact. Upgrade the easy way on the My DSTV app.
Welcome back. In case you have just joined us, you are watching Money Matters, a program designed to equip you with knowledge and tools to make informed financial decisions. We are discussing financial inclusion. My guest is Miriam Zimba, the PRO from the Bankers Association of Zambia. Madam Miriam, when we talk about financial inclusion, I believe financial inclusion, we cannot talk about financial inclusion if we have a society that is lacking financial literacy. So how important is financial literacy
Okay, thank you very much.
to financial inclusion, in achieving financial inclusion?
Okay, so I would like to tie that with some of the barriers that are associated with access to financial inclusion. You talk about things like high cost of transaction fees, the cost of sending money, the receiving money. Those are some of the barriers. We talk about limited access too. There are people that are just limited because of maybe things like distance to the nearest financial access points. There are those that are not so savvy and may not know how some of these features works, the financial products and services that are available on the market. And so because of that, they are limited and they do not have that access. There are those that will be limited because of acceptance, acceptability, adaptability. There are certain places where you go and say you'd want to buy something from a shop and they tell you, no, it's cash only. We're not able to get these other platforms, mobile payment, we can't do that. So that again becomes a limiting factor. And like I said, certain access points are very far. If I have to move from point A to point B just to deposit my money so that I can transact, that can also be a limiting factor. So you asked about financial literacy. Financial literacy is having the knowledge and skills to be able to use financial services and products that are available on the market. So this plays a very important role because remember when we were defining financial inclusion, we said informed access and use of. So financial literacy is the one that bridges that gap to ensure that somebody understands fully the available opportunities that they have with their finances and how to make prudent financial decisions that will benefit them and their families and their communities at large.
Okay. So you coming from the Bankers Association of Zambia, what role has the association played in promoting financial inclusion in Zambia?
Okay, thank you so much. So for us, financial inclusion is at the core of what we do. It's very central to what we do on a daily basis. And when we talk about that, we talk about even the institutions that are affiliated to the Bankers Association. These are registered and licensed commercial banks. So they play in the financial services space. They provide these services and products. Beyond that, we also are engaged in uplifting financial literacy levels and financial education. So we do have outreach programs. We do reach out to communities. We reach out using various platforms. In-person community engagement, we reach out through the media, we reach out through our website, we reach out through our social media handles, we reach out through various means just to get the information out there. So that is the role that the association is playing in this space. We are also heavily involved in, very soon we'll be having the World Savings Day that comes up in October, and the actual day is the 31st of October. So it's an annual commemoration that talks about the importance of savings and the importance of being financially prepared. We also have another major activity that takes place in March, and that's the Financial Literacy Week. And for both events, BAS is the co-chair in organizing these events. So these events, we've got the regulators, we have the government in place, we have the financial sector players, and all these other institutions that are involved. So we are also heavily involved in drafting assisting in drafting government policy documents such as the National Financial Inclusion Strategy, the National Strategy on Financial Education, and all these others. So BAS has been recognized as a critical player in this industry, and we take part in these committees in order to be able to form what is acceptable for the country and what government is able to take up and review and look at and say, yes, this forms a national policy document that can be used by the financial services and the providers, as well as the individuals like you and me out there.
Wonderful. So Miriam, how can a government or financial institutions, regulators and the media work together to promote financial inclusion?
Okay, so thank you so much. I'll start with the media. The media play a very central role. They offer checks and balances. They are able to look at some of the gaps that the providers of financial services and products may not be able to immediately see. So they offer these checks and balances, and they also help us to disseminate information. The regulators, on the other hand, are there to ensure that the market players, that includes the banks, the insurance companies, the mobile money operators, and all these people who are providing these microfins and all that, are within the policies that have been put in place by government, and they are compliant. They are not being exploitative to the users of these services and products, and they're also being prudent in the way they manage these finances according to the guidelines that are issued by government and through the regulators. Government is there overall to put in place policies that will be conducive, offer a conducive environment for market players to be able to operate and for the private sector to thrive. As you know, a lot of these financial service providers are in the private sector. So government is there to put in place these policies to ensure that all these are able to operate freely and the benefits are able to reach the users at the end of the equation.
Great. For viewers watching this program right now who feel that investing or using formal financial services is only for the wealthy, what would you say to encourage them as for them to take their first step towards financial inclusion?
Okay, so the best time to be part of, to be onboarded and to be part of the financially included was yesterday. But the next best time is today itself. So like I said, finances play a very critical role in our everyday lives. I may not be running a business, but I'll still need money to be able to access some of the things that I need to access for my personal use, for my use at home, for my use in my place of work and all these other places. So it's very important that people are financially included so they are able to have this knowledge, which is coupled with financial literacy. That gives you the knowledge to be able to have access to and information on how you can use these financial services and products for personal development, community development, for your business development and all that. So for those that are thinking that it's only for the wealthy, it's not for people like you and me, the good news is that if you save 2 kwacha, this is a very basic example, if you save 2 kwacha every day from 1st January to 31st December, 365 days, you have yourself 730 kwacha. It looks like a very small amount, but it's the principle. If I'm able to save for the first year, if I've not been financially prudent, and if in that first year I'm able to save a 730, the following year I'll give myself a bigger challenge to say, okay, last year I was saving 2 kwacha per day. What about if I move to 5 kwacha or 10 kwacha? Or I give myself a monthly target. And this is how we build that culture, which eventually culminates into huger financial base for yourself, for your communities, for your families, as well as for your businesses.
Okay. Finally, as we come to the end of the program, what are your closing remarks as regards to financial inclusion?
So we still have, we have done very well as a country. Currently, our financial inclusion levels as a country overall has moved from 69% in 2020 to 80.1%, which is a very good indicator. So like we said earlier on, financial inclusion is largely being driven by the mobile money services and as well as these other formal and informal financial services that are on the market. So we are now at 80.1%, but we can do more than that. And doing more than that begins with financial literacy. So information is there. We ourselves as BAS are there to provide information. And for those who want to reach out to us to be able to get that information, we are always available. We do not charge any amount of money to provide these financial services and products, but where people need financial advice, investment opportunities, there are also individuals and institutions that offer these financial advice. So it's very important that we continue, each one of us doing our part, making use of, not just having knowledge of mobile money or a bank account or an insurance product, but be actively involved. This is how countries grow. This is how a few years ago we used to see certain countries in Southeast Asia that were not as developed as they are now, but it is inventions such as these, financial inclusion based, when it's widened, more people are actively participating. This is how we begin to contribute as an individual to growing the economy of our beloved nation. Thank you.
Miriam, thank you so much for making an appearance on Money Matters.
Thank you so much.
Viewers, it is clear that financial inclusion is important for any country because it gives people greater access to financial services, promotes economic participation, supports savings and investments. That's all we had for you on Money Matters. This has been Faith Katai. And on behalf of the entire Zanis production team, goodbye. Thank you for watching.